I mean, look, the stock has run up quite a bit past week or so. I mean, this tends to happen with this stock.
They also disclosed their energy storage deployments, and it was a record number.
The way that you get to a valuation, trillion, trillion, half, 2 trillion Tesla, it's not auto.
All that and more. So let's get to it. Nothing serious before the holiday, nothing serious before the fireworks on Independence Day. Tesla just up over a little bit, 6% for the day. Up almost 1% in the after hours, currently sitting at 248.32. The week has been quite plentiful as it is up over 27%. Year to date, almost all of those losses have been eroded. And if you let the financial news media tell it, you kinda get the feeling that they have more room to run.
As drivers are hitting the road this 4th of July weekend, they might find reason to celebrate at the pump. The national average price of gasoline on July 4th is expected to reach $3.49 a gallon.
Stop paying for gas. This is ridiculous. Stop paying this much for gas. You know what has me excited? Tesla and their new military discount. Military members, veterans, and their spouses, if you want them in the safest thing possible, you'll utilize this $1,000 discount and get them into Tesla.
227 is obviously below where we are right now, and you recently reduced your price target just a couple weeks back based on lowered Robotaxi assumptions. How much of the 227 at this point is Robotaxi? I guess you're not expecting much out of the 8.8 event.
Poor Tom lowers his price target and then the stock just takes off. Alyssa has a tendency to be quite savage.
It's about 52% of my valuation
Okay.
is Robotaxi. Dropped it from about 70%. I mean, look, the stock has run up quite a bit past week or so. I mean, this tends to happen with this stock. I doubt a lot of the investors who are pushing the stock up are doing all the rigorous math that I've done.
Considering any figures of math are going to be quite off, my back of the napkin math is going to do me just fine. In fact, the base case of my price target doesn't even include Robotaxi, and only in my bull case scenario do I discount it back from what I assumed the figures could be. Because once again, all of those figures that I created are going to be bullshit, much like Tom's figures. My base case still sits at $315 per share, where I had it right after the first quarter earnings. It must be exhausting having to change your price targets every other quarter.
So maybe it's run a little much. I think the delivery number is something that folks are maybe over analyzing. This is really an autonomy play. August 8th, I think it's important kind of from a conceptual point of view. You're going to get people like me write these long, flowery reports, but you're not going to get meaningful financial contribution from a Robotaxi for a long while. So, yeah, I think we're caught between these two waves of growth. Not sure how much near-term upside is there in the stock, but I do like it.
When you said that, others may not do the rigorous analysis, what are you basing this rigorous analysis on? I mean, a lot of other analysts who are pointedly bearish on the stock will say that we've gotten no details on what Robotaxi will be or what it might mean for the company. So how do you then plug that into a model which is so fine that you can go from a $600 billion valuation plus to 400 something?
I think the way to approach this, do a top-down look, right? You say, do you believe in Robotaxis? Yes. Okay. What is the market size for this? It is enormous. Okay. Then you try to be as conservative as possible. Actually, the reason why I cut from 600 to 400 billion is because I lowered my pricing assumption with the help of our internet analysts, and I raised the amount that companies like Uber and Lyft are going to get from that relationship because I was underestimating the value from those app providers.
Maybe I am too, because I don't think that they're going to be able to compete with the Tesla app. Wherever the Tesla Cybercab is and the Tesla Robotaxi is active, that is a wrap for traditional rideshare. And that's where you can get some of these base assumptions, which are going to be proven inadequate as reality will play out this scenario. Tom's right. You want to be absolutely conservative, but there is no doubt Uber, Lyft, wherever Tesla's Robotaxi is active, it's going to be considerably cheaper. It'll be magnitudes worse compared to what Uber and Lyft did for the cab industry. As more and more cars get added to the Tesla Robotaxi fleet, my bull case, which includes the Robotaxi situation and Optimus, is a little bit ridiculous. That's why I choose to keep my base case sans Optimus, sans Robotaxi. It gets a little nutty. But even without that stuff, my base case is still almost $100 higher than Tom's.
I'm interested in your take on how far ahead of the curve they are on robotaxis in terms of innovation, because clearly they were ahead of the curve on EVs, but pretty much everyone's caught up with them now, and some Chinese players like BYD can deliver EVs at a much lower cost. So could the same thing apply on robotaxis, at least this time, even before it's become widespread and adopted?
Yeah, that's why I did this approach where I looked at the entire ecosystem. There's a lot of players that are going to play in this, right? It's like really three parts. It's the car, it's the software, it's the app. There are going to be a lot of OEMs that are going to make the car. There are going to be a lot of companies that will do the software. In terms of them specifically, I do think FSD version 12 was a breakthrough event. I mean, Elon's completely pivoted the company from not only from a headcount perspective, but in terms of pushing out the next-gen facility, now unveiling the Robotaxi on August 8th. It is a game changer, and they do have the most miles on the road thanks to Autopilot, the biggest fleet of cars on the road. There are a couple other companies, obviously. Mobileye is a good notable one. Obviously, GM and Waymo are. So there are going to be a lot of players in the ecosystem. All I'm saying is they will have a big seat at the table. And like I said, 20% market share for their walled garden, I don't think that's unreasonable. And only 7 to 8% in Europe and China. It's because the overall TAM is so big. It's in the trillions of dollars. I'm only saying they're going to get 400 billion of this enormous game-changing market.
First, let's talk about the three parts. The car. Everybody's going to be making battery electric vehicles. That's a given. Some will be able to make profit off the vehicles better than others. But in addition to building the car, they've got the software. I suppose you could use an inferior search engine, or you could use the best one on the planet. And then when you throw in self-preservation, not only are you going to want the most efficient software, you're going to want the safest software. And the third portion is the app. The Tesla app is so universal, it's going to take care of everything. Uber, Lyft, their apps, they're going to be obsolete. They're not going to be able to handle what's going on in the cybercab. Tesla's app will be the most intuitive to the consumer's needs. There's no driver. You want to control the radio? You want to control the temperature in the vehicle? You want to personalize how the software is driving? You're going to the Tesla app. Not only will it be cheaper, but it'll be more efficient, more comfortable. Even though Tom lowered his expectations of what Tesla can capture from the market share, regarding FSD and the Robotaxi scenario that could play out 10, 15 years from now, even where he revised from, is more than likely way too low.
They also disclosed their energy storage deployments, and it was a record number, about 9,400 megawatt hours in Q2. Now that's more than double the record number that they reported for Q1. So the energy storage business is really taking off.
There we go.
That business segment was only 8% of total revenue in Q1. But it's really taking off, and Tesla's been talking it up for some time, and now we're really starting to see it. And I think that's really more than offsetting, some of the weakness still that we're seeing on the auto side. For a long time, we've been talking about Tesla being much more than an auto business, and really what we saw just a few weeks ago at their annual meeting is I think Elon Musk did a really good job shifting investor focus away from the near-term challenges on the auto side, more towards longer-term growth opportunities in energy storage, in AI, and robotics, and other business lines. And I think that's why the stock, you've seen this sentiment shift regarding the stock.
Does that valuation expansion, though, put a lot of pressure on the Robotaxi and the autonomy reveal coming up? Garrett, how heavy now is that announcement as far as weighing Tesla's outlook?
Yeah, it becomes more and more important. That's why we're somewhat cautious here with our price target. Still have a buy on it, but we're really taking a wait and see approach, ahead of that August 8th Robotaxi day, which in our view is a much more important date than their earnings date in a few weeks on July 23rd. So, and I think, everyone is really looking at that Robotaxi day. What are they going to announce? But clearly just given the move up in the stock since April, the bar is now much higher for them. And so you worry about them falling short of expectations, but we know that they've been, working on a lower price EV. This has been rumored for years now. And so we actually think they're further along in development of the Robotaxi, and that actually we could see first production of this vehicle by the end of next year. So, that's kind of where our expectations are heading into that Robotaxi day.
Quite a bit of information will be unveiled on 8/8. My assumption, it won't be enough for the street. The stock might get dinged up in the short term thereabouts. A speed bump, if you will, as the stock continues to soar in the second half of this year. We're gearing up for a record Q3, people. Record. Not only is the energy division contributing materially, the vehicle side of the house is going to return back to form. Adding fuel to that fire, the progress of FSD and Optimus. I remember when Amazon's biggest competitor was Barnes & Noble. Keep on thinking that Tesla is just an auto company.
We saw demand soften in China and globally for EVs. Boom came off the rose. They missed deliveries in 1Q. But our whole call was adult in the room, Musk steps up, turns us around, cuts prices. Then the mojo returns. And that's what we saw yesterday. I mean, the 2Q deliveries handily beat Whisper and the street. And Paul, I believe we're going to a historical period because Robotaxi Day, August 8th, we just raised price target to 300. I could argue FSD and autonomous. Tesla is the most undervalued. Full self-driving.
Full self-driving.
Tesla is the most undervalued AI play in the market.
As sensational as it might sound, Dan Ives is correct. I suppose as long as the stock is up, Dan Ives is going to have his pom-poms out.
Everything you just said is about automobiles. If we can all agree Toyota's the machine of the world in automobiles, to be charitable, it's trading at 10 times earnings. How do you buy Tesla? Forget about the disasters of America when the best run machine is running at 10 times earnings.
Yeah.
The future of automobiles is electric and autonomous. Until Toyota can wrap their heads around that, devote all of their manufacturing prowess to those two aspects of automobiles, their valuation is perfectly fine where it's at. Like comparing Amazon to a bookseller.
I've always viewed Tesla as a disruptive tech company, never viewed them as an auto company. And I think more and more the software piece, especially when it comes to FSD and autonomous, that is ultimately what's really going to distinguish them more and more going forward. The way that you get to evaluation, trillion, half, 2 trillion Tesla, it's not auto. It's that this is essentially an AI play. It's data driven. And the sum of the parts model starts to play out. That's why I believe this is marks a huge inflection point in the Tesla story. And I think August 8th, look, just like we talked about with Apple going to WWDC with Cook and the AI strategy, this will be a historical moment for the Tesla story.
I really believe people have a problem digesting what Dan Ives is saying, simply because he uses such powerful language with things that they just aren't comfortable with accepting. I agree with him because I can see where the company's headed. But for those individuals that just aren't there yet, it just seems like he's a crazy man. I, for one, would like Dan to just dial it back. I'm excited too, but you gotta dial it back a bit. Explain to them that Tesla is not only the best at manufacturing battery electric vehicles, but explain to them that they are covering all of their bases to not only make sure that they survive, but anybody else that is producing battery electric vehicles. This transition isn't going to be easy, but they're spearheading it and executing damn near flawlessly. Their charging infrastructure is ridiculous good. Residential and commercial battery storage, the ecosystem that surrounds their business, are going to be major players in those arenas as well. And then when you think about how they're going to dominate the rideshare market, how their manufacturing prowess is going to impact the building of Optimus. All of these technologies compounding on top of one another to get them to a multi-trillion-dollar valuation. Maybe Dan Ives just doesn't have enough time to explain these issues in the time that he's given on these financial news media channels.
So what is that event? Explain to us what that event is.
So they're going to basically introduce their autonomous and robotaxi fleet, which essentially is going to lead to, over the coming years, I believe 1 of every 5, 1 of every 6 ride shares at some point.
Which city is going to do what you're talking about? It's not congestion New York.
Why not?
Look, I think next 3 to 5 years, autonomous is coming, because in China it's coming. FSD and autonomous is happening.
It's going to work in Kansas City.
It's gonna work everywhere.
It will work in Kansas City. I say, but put it this way, by the end of the decade, you will have a percent, 5, 10, 15% of what I'll call shared rides that will not have a driver.
Okay.
The skepticism is palpable until it isn't. In conclusion, Tesla stock continues to soar, and the financial news media, when they are reporting it, only have glowing things to say. The bears have retreated quite a bit, and rightfully so. There's some notes out there where they're like, nothing's changed, Tesla's still overvalued, blah, blah, blah. In my personal opinion, I believe TSLA has the potential to have a very meteoric rise in the second half of 2024. The energy division has woken up. They are a viable contributor to the financials. Q3 very well could be a historic quarter for the company, signifying that their growth trajectory is back on track. But before that, we have August 8th, which is going to describe in great detail their pursuit in ride hail. I believe the stock is up because people are starting to recognize this is not just an automobile company. That's all I've got for you today. Be easy. Peace.